Hello, Seasonal Vantage Insiders, Alex from MarketWise Asia. So today's date, it is the 16th of February 2024. It is a Friday afternoon, about 1:40 p.m. as I'm doing this video. So this is the end of the week update. And also, trying to cover for next Monday, next week onwards, okay? Because, for this coming weekend, Saturday, Sunday, and Monday, I will be in Bintan for a vacation with my family. So I don't have the time to do a video updates for you guys on the 19th of February on the Monday. And anyway, on the 19th of Monday, next Monday, it's actually a US holiday. It is the Washington birthday. So anyway, the stock market is not going to open as well. So yeah, so just going to do this quick end of the week update. I don't know how quick it is, but just going to share with you some of my thoughts, okay, in this video. All right, so yeah, so let's head over to the members area right now. Okay, so for the past week or so this is the blog post on the members area on the 12th of Feb. I mentioned a few ideas over there. So I mentioned that, I entered on these air transport services, watch list is the Teledyne Technologies, TFS, and such, okay? Yeah, and just to let you know on the S&P 500, okay, I'm sure you guys know that, on this Tuesday, there was a very sharp sell-off, like the S&P was down about 1.4%, and then the Nasdaq was down about 1.6%. The weakest of all and was the Russell 2000. Okay, the small caps down about -4%. So at that point in time, a lot of position will get stopped out. So in this case, okay, it can't be helped. All right, air transport services initially it was doing pretty well. So ATSG, this is ATSG, was doing well. Okay, so on this day, okay, the market had a quick 1 day sell off. I actually take a small loss. I never wait until the full loss, then I exit manually. So near the open, I exit. So I lost very little. Okay, because I was entered a bit earlier. So just scratch the trade a little bit. Okay, scratch the trade, slight losses, but you can say that I scratched the trade. Okay, the one that I lost is actually TDY, Teledyne Technology. It's quite frustrating, to be honest. Initially I went long, it was came back down because of the sell off and then go back up again, that kind of thing. But can't be helped. So I exited on that. And I mentioned on this is this watch list. On the short one is the Indonesia ETF. This one a bit hard to enter. Okay, so even though price came down quite a little bit, okay, all right, not say a little bit, I mean that because price actually when I first mentioned it was here, price came down, but it was hard to enter. If you enter on this gap down, okay, then you are chasing, then price went up again. So even though if you short exactly here, then you could profit lah, but I mean that is kind of hard to short at this area over there lah, okay, because there was no trigger and such lah, okay, and yeah, so I don't think most of you all should enter on this, okay, and then because it is kind of chasing already, okay, and then yeah, so this is the update for the members area over there, and then I mentioned that the market was actually toppish, okay, so market internals was showing divergence and such. So the key thing is, okay, I think the market have to wait until tonight's OPEX expiry. So tonight, 16th of Feb, all right, it is the OPEX expiry. OPEX means the options expiry, okay, where all the third Friday of the month, where all the options contract get expired, okay, they're expired. So there'll be some volatility, okay, and as I mentioned, right, heading towards OPEX, market tends to go higher. Okay, so in this case, okay, we can see that generally minus that 1 day sell off, the market really indeed go higher. Yesterday I explained to you, okay, why during OPEX actually the market tends to go higher. Like there were a few people who actually asked me, hey, Alex, can explain why during OPEX the market tends to go higher. Okay, so before I go into that, right, just to go back to the members area over there. Okay, and then I also mentioned sharing about the treasury bonds, the TLT. So, during this period, there's this window of opportunity somewhere around here, mid February until maybe the start of March. Okay, there's this seasonal bullishness over there, and I mentioned that price should close above this long trigger 93.5 for the long trigger, and if price actually it is above 93.06, I'll be keen to enter. So for me personally, right, because yesterday I was actually away from the my desktop, so I actually set a stop limit order. Okay, so my stop order was actually 93.5. Okay, my limit was 93.65. So essentially it is telling the broker that I want to enter when price is above 93.5. Okay, the maximum I will enter is 93.65. So if the price gap up at 93.66, okay, I won't be chasing. So of course, the market open at somewhere around here, so I get filled at 93.5 or 93.55. Okay, I get filled at 93.5. So I was inside the trade. Okay, so as I mentioned, also close above 93.06, I'll be also keen to enter. So I am inside the trade. Okay, so Henry Goy asking, right, so Alex, can you explain why you have decided to enter this since the price is in the cloud and also below, okay, the central pivot range? Okay, so there's a reason. Okay, so let's go to the TLT chart over here. So this is the TLT over there. Okay, so besides the pockets of opportunity, the bullishness from mid-Feb to until the end of February or early March, right? Okay, there's this bullish seasonal. Another thing I want to share with you that, of course, one of the other factor is that there is a potential bullish reversal. This is my little secret indicator. Again, this doesn't mean that price will definitely go higher. Okay, it doesn't mean that the market will definitely go higher, but this is one indicator or one factor that influence me. And the second factor is that if you look at the longer term time frame, right? Okay, so if you look at the weekly time frame, oh no, sorry, it's the 2-day. Sorry, yeah, it's a 2-day. Okay, we are actually above the cloud also. Okay, we are above the cloud. So sometimes I look at the 2-day time frame as well. Of course, I know it might get confusing, and let's want to know when to watch our daily, 2-day, and weekly. As I mentioned during the webinar, I think last week I mentioned about the 2-day time frame as well. So I do look at different time frame. Of course, if you look at the weekly, of course, then it is actually still down. It is still down. But judging from the seasonal, plus the plus these potential star signal, I think I'm willing to take a bet. And also, okay, judging from price action, you can see that this was the prior swing low over here. Okay, so we add in, okay, we remove, okay, this one 93.5 is of course the wash line. So let's ignore that and use that as the potential swing low over here. Okay, so potential swing low. So price actually broke below this swing low and then reverse back up. So this is also from traditional standard technical analysis, right? This is also bullish because this is a forced breakout and then reverse back up again. So those who actually shorted on this candle, okay, they got trapped already, and then price cannot go down lower and then reverse back up again. Okay, all right. And of course, if you add in the usual pivot point indicator, you can see that actually yesterday, price was not too bad at the closing. Price still stay above the S1 support line. Okay, so price previously price was below the S1 line, right? So below that, price is acting as a S1 will be acting as a resistance line. So when price go higher above the S1 and then price head back down again, this S1 will act as a support line again. So you can see that yesterday the S1 is acting as a support line. Okay, and of course, price is also based on the daily time frame. It is still above the cloud. I repeat, it is still above the cloud. So Henry, when it is inside the cloud, okay, it is fine. Okay, it technically, okay, based on rules, right, it is still on a uptrend because price is still, okay, within the cloud. Okay, it is not below the cloud. It is not below the cloud. So it is technically still on a uptrend. Okay, so these are the few various factors that lead me to want to enter as well. And of course, okay, another thing is that from here, okay, to the central pivot range over here, there's some distance away, which means that let's say if price really does rebound, right, we do have some room for the price to go higher before we hit the major resistance at the central pivot range or at the pivot point. So there's enough meat for you to take some profit there. Let's say, for example, okay, if this is the TLT over there, and then maybe the CPR or the pivot point is somewhere around here. Let's say it's somewhere around here. Then maybe I will not take it because there's a very good chance that price hit the CPR will be acting as a resistance level again, and price will be choppy. Okay, so another factor is that we are quite far away from the CPR, so there is room for the price to actually head higher and hit the CPR. If price really does hit the CPR, then I'll be looking to exit and take some profit off the table or exit fully. Okay, so I hope that answers your question. And also looking into the seasonal data for the next week, right? So this is the bullish ETF data over there. You can see from the week of 18th to 25th of February, you can see that a lot of these, bonds, different kind of bonds. Okay, not the usual, the 30 years bond, like TLT, or the 5 years, 7 years bond, that kind of thing. But if you look at the chart, right, all these bonds they typically move in tandem. I think another like famous one is actually this TIPS bonds ETF. So you can see that this TIP bond ETF, the price action is also about the same also. So judging from there, next week onwards, technically, based on seasonal, it is bullish. So I'm willing to take this bet that try this, okay, to go for long for the TLT as well. Okay, and looking and if you actually look at the data for the bullish stocks, right, actually not a lot for the week next week onwards, because okay, again, based on seasonal, right, second half of February tends to be weaker, all right, compared to the first half. So the weakness in February typically start after mid-February. So you can see that the bullish stocks after mid-February for that week actually is a lot lesser, very little already. Compare if you look at the bullish bearish data, okay, from the 18th Feb to 25th of February. So I already pre-filtered already. So there is actually quite a bit of this. This is for the ETF, right? So there's also quite a bit for the ETF and also for the bearish stocks. Okay, 18th to 25th, you can see that quite a bit also. There's quite a bit starting reading. There's more than the bullish one over here. Okay. So having said that, okay, so as of now, the market kept going higher. So to be honest, okay, I can feel the squeeze in me also, even though I didn't really take a lot of shots. So some of the shots, okay, are still profitable. You can see that, inside me, I was thinking, hey, how come the market keeps going higher, grinding higher and rally, okay? So the fact is that I think the market will continue to go higher until all the people who wanted to short, okay, give up. Okay, a part of me wanted to short until I really give up. Then maybe the market can really come down. Okay, but as of now, I think maybe, okay, the time is really near soon. So if moving forward after the February OPEX up, which I mentioned, right, it is the 16th, which is tonight. If moving forward next week, the market still can't go down, then very likely the squeeze is going to go higher until Feb, which is the quad-witch month, the first quarter, where everything, all the option expiry, futures expiry, all expire, which is next month already. Okay, so let's see whether this coming this tonight onwards, the market will have the correction that we wanted to see. And of course, not to mention, right, after tonight, then next week, okay, next week there is this NVIDIA earnings. NVIDIA earnings is on the 21st of February. Just nice. Okay, Monday is a US holiday. Okay, then Tuesday, then Friday, then Wednesday. Wednesday is after market close. NVIDIA will actually so-called do its earnings. Okay, reporting its earnings. Okay, so this is also a very anticipated earning. This can make or break the market as well. Okay. Okay, moving back to the data again. Having said that, right, so this coming week, I don't have any watch list to go long or to go short. So to go long, I am not so keen because, you know, typically after OPEX, it is bearish. And to go long now, also, I'm not so keen. Market has been going higher already. So yeah, so to be really frank, I really want to stay at the sideline. So I don't feel comfortable. Okay. All right. So you might be saying, hey, Alex, you know, you miss all this NVIDIA and all this. So if I am not mistaken, actually, if I'm not mistaken, so for, let me see, for the, so for the bullish one, actually during this period, NVIDIA, it is actually bullish. No, this is the stocks. Is it inside here? Oops. Yeah, can you see the NVIDIA over there? NVIDIA, it is actually inside here, okay? It's from the 6th Feb to 20th Feb. From 6th Feb to 20th Feb. So for NVIDIA, all right, 6th Feb to 20th Feb. It is actually seasonally bullish. You can see that, oh, it actually also worked like a charm. Okay, it just continued to head higher. So this is also in line with the NVIDIA data as well. But of course, I didn't take it because there is no trigger as well. There is no trigger. There is no trigger, no watch and reach trigger that I'm see. So I'm perfectly fine to miss this NVIDIA run as well. So as I mentioned, right, okay, you should look at the data yourself. You don't have to follow me, okay? You know, there's a lot of other stocks. If you have your way of trading, you see NVIDIA, maybe, okay? I don't know who actually entered NVIDIA based on this seasonal data. You can comment on the comment section. Let me know, okay? So you should do your own, own judgment, your own analysis as well, okay? So you might be thinking, hey, Alex, the things of you mentioned, you just went up a little bit or such, or at most break even, or it's still doing fine. The portfolio actually is still positive, okay? But of course, as I mentioned, hey, Alex, you missed all this. As I mentioned, I'm perfectly fine because these hot stocks like NVIDIA, SMCI, okay, all right. If you missed it, you missed it one. It is very, very difficult for you to chase one. So there is absolutely, no way for me to enter unless I really chase it. I see go higher, I chase, I buy, I chase, I buy. But the problem is I don't know when the music will stop. So this is not my style of trading. I repeat, this is not my style of trading to actually look into all these hot stock, okay, and they go a few 100% higher, and then I ask myself, hey, how come I didn't enter? I know exactly this is not my style of trading. This is not my preferred way of trading. So I'm perfectly fine if I miss, like for example, the recently very hot one, SMCI, NVIDIA. So I'm perfectly fine. Okay. In case you're asking me, hey, how come I don't trade these stocks now? I don't trade the hot stocks. Okay. Yeah. Okay, so let's move into the options thing. So as I mentioned, right, typically into the options expiry, right, price tends to go higher. So why? So actually one of the goals for this coming 2024 this year is to actually understand deeper into options. When I say understand deeper into options, it is not about executing the option trade, like how to execute the covered call, how to buy sell covered call, how to do a vertical spread, how to do a calendar spread, how to do a butterfly spread, what strike to buy, what is the delta to choose. Not all of this. All of this I know. Okay, I know. I used to trade options before, but now a lot lesser. Okay, what I want to know about options is the options flow. Okay, how options will affect the underlying. The underlying is of course the stocks. Okay, because options for the past 1 or 2 years has exploded exponentially. Okay, adding in that zero DTE options, okay, where the stocks on the date, where the options on the date expire. So it's adding a lot of volume into the options. And to extend that, what happens, okay, in options can affect the stocks movement right now. It used to that, the underlying, okay, will affect the option price, right? Many years back when options is still not so popular. But right now, okay, the options flow can affect the underlying stocks. Yeah, you heard it right. Okay, what happened in the stocks in the options flow can affect the stock price movement. Okay, case in point, it is like the GameStop. I think in 2021 or 2022, you heard of this gamma squeeze and all this, right? These technical terms on options. That caused the price to actually hit higher. Okay, yeah, the activity in options, okay, cause the stocks to go higher. Okay, so I'm going to explain why. I hope I can explain simply. So 22 minutes already. So let me try to explain, okay, why during OPEX the options tends to go higher, and why after OPEX, okay, market tends to go down a bit lower, that kind of thing. Okay, so let me go through one quick example over here. Okay, so let's use Apple stock as an example, AAP. Okay, all right. So for example, I don't know, maybe you are interested to buy the Apple options. So you wanted to buy one contract of call options. You want to buy one contract of call options. Okay. So you buy the call options. Okay. So when you buy one Apple call options, what it is your bias? Okay. Essentially, you are bullish, right? Okay, because you buy a call option. So if you buy a call options, you are bullish. You are anticipating that Apple stocks will go higher. Okay, all right. Then I need to ask you. So in this example, I'll use the call options as an example. Okay, all right. I won't use the put option as an example. So when you buy one Apple call options, okay, you need to understand. Okay, someone has to sell to you. Okay, someone has to sell to you. Okay, the one selling to you most likely is not another retail trader, matching and selling to you. Most likely it is going to be the market maker, what we call the MM, or what we call the dealer. Okay, they take the other side of the trade, because if you want to buy something, right, somebody has to sell to you. So in this case, if you buy one Apple call, okay, the dealer has to sell to you the Apple call. So essentially the dealer is the seller. Okay, so he is also selling you the Apple call options. So he's the seller of a call. Okay, so technical term is short call here. Okay, the technical term, if you buy a call option, is a long call. Okay, so again, to ask you, right, when you short a call, if you sell a call, okay, what are you actually expressing? Okay, what is your bias? So if you short a call, so essentially you want price, okay, to go down, right? Or at least you want price not to go higher. So your bias is actually downside. So you're expressing, you're actually shorting the market. Do you follow what I'm trying to say? You understand, right? I think for those who have some options knowledge, you should understand. If you do have options knowledge at all, never mind, okay? Just try to follow along. So essentially, you want price to go down, or you want price not to move higher, okay? So you are actually bearish on the Apple shares, okay? But the issue is, okay, this market maker or the dealer is not interested to have a directional trade. They are looking, okay, to make profit from the bid ask price or from the options commission. Okay, they don't want to have a directional bet, so they are not interested to bet that Apple will go down. So how? So in that case, right, they need to hedge their position. All right. So if you are selling a call options and you want to, and essentially you are betting that Apple shares will go down, right? So how do you hedge that? How do you hedge that? Okay. So you hedge that, okay, by buying the Apple shares directly, underlying, okay? The underlying. So this is the underlying. This is the underlying, okay? So in order to hedge your options position, okay, all right, you buy the Apple shares directly. So in other case, okay, because you sell the call, if Apple shares goes up, right, you lose money, correct now. So in order to hedge that, you buy the Apple share directly, underlying from the stock market itself. So you get what I'm trying to say. So which means, okay, if you buy one Apple call options, okay, the market maker will actually go to the stock exchange and buy the Apple share directly. So the more you buy the Apple share, the more traders buy the Apple share. So 10 contract, 100 contract, 1,000 contract, 10,000 contract, Apple. So the more people actually buy the Apple share, the more that the market maker has to go and buy the Apple share directly. Okay, RBI. So the more the traders buy the call options, the more the people buy the call options, the more the dealer have to go and buy the Apple share directly. Can you see how that leads to the price heading up? Because they are going to the options, they are heading to the stock market itself to buy that. How much to buy? Of course, is based on the delta. So I won't go into that. Okay, how much to buy is based on the delta. So that's why you hear people say, I want to be delta neutral, for example. So let's say, for example, if the when you buy the call option at that time, okay, the delta is actually 50, then the market makers have to go to the stock market itself and buy 50 shares of Apple shares directly. Okay, but I won't go into that. Okay, so you understand what I'm trying to say, right? Okay, so leading towards the OPEX, right? Okay, they keep buying because they have to hedge their short call position. Okay, after the call options expire on Friday, then what to do? Okay, the dealer does not have to hedge their position anymore. Okay, so they have to sell away the options shares. You get what I'm trying to say? So they unwind the option shares after the expiry, and that leads to, generally price starts to head lower down. Or in other words, you can say that, the market makers unwind, okay, and let the market do its own job. Okay, so they don't try to influence the market anymore. So they just, okay, let it go until the next option expiry date that's coming up. Okay, that's on March. Then the options position will start to build up again. Let's say, for example, or more people start to buy Apple shares again, and the more people start to buy Apple options, call options, then the market dealer has to go in and buy the Apple shares directly, okay, to hedge their position. So that lead to feedback loop. Okay, the more people buy call options, the more the market makers has to buy the Apple share directly. Okay, you hope you get what I'm trying to say. So this is some of the options flow that you need to understand how they will affect the market. Okay, all right. I hope you learned something new. Okay, so maybe my explanation is not that excellent. Okay, Yeah, maybe I need to improve my explanation, but roughly you get the idea lah. So if you learn something new on this, right, okay, let me know in the comments. I actually mentioned that during one of the Facebook Live lah, but this will take some time to explain, so I didn't really explain most of the time. So you can call this a master class. Maybe I have a one session trying to explain again on this option flow, okay, and all this in like delta and gamma, strike and all this, okay, to explain, okay, all right. So with that, I wish you a very good, safe trading week. So next week, most likely, I won't have any position yet. I won't be going long. Short wise, okay, I think it's a bit too early unless you short now, but it might trying to squeeze us some more and head up higher. So I'll be staying neutral at this moment in time. Okay. All right. So let me know what's your comments. What are you buying? What are you selling? This kind of thing. Share with me in the comments. I think the comment section is getting a little bit quiet. I'm sure many of you are actually watching the video. Okay. All right. So thanks so much. And I'll see you guys again next week. Thank you.